What if I told you that right now, as you're watching this, a massive, silent wealth transfer is happening all around you? It's not the stock market. It's not some crypto scam. And it's certainly not what the nightly news wants you to focus on. We're talking about inflation. But not just the rising prices you see at the grocery store. This is about the hidden mechanics of how inflation isn't just eroding your savings, but actively shifting money from one group of people directly into the pockets of another. And understanding this microeconomic truth is the key to not just surviving, but thriving. For most, inflation is a monster that eats away at purchasing power. You earn $1 today, but tomorrow it buys you less. That's the simple, painful truth we all experience. But what if I told you that this monster is actually a highly predictable phenomenon with specific winners and losers? It's like a financial earthquake. And while some buildings crumble, others stand firm. And a select few even manage to build new foundations on the shifting ground. Think about it from a microeconomic perspective. When the money supply expands, or demand outstrips supply, prices rise. But they don't rise uniformly across all sectors. This differential rise is where the hidden loopholes emerge. Certain assets, certain types of debt, and even certain skill sets become incredibly valuable, while others rapidly lose their economic leverage. Are you on the winning or losing side of this invisible battle? Let's break down the first hidden transfer: debt. Conventional wisdom often warns against debt. And for good reason. High-interest credit card debt can be a financial killer. However, in an inflationary environment, fixed rate, low-interest debt can become your greatest asset. Imagine you took out a mortgage at 3% interest when inflation is running at 6%. The real value of your monthly payment effectively shrinks over time. You're paying back yesterday's more valuable dollars with today's less valuable dollars. It's almost like getting a stealth pay cut on your debt itself. Or rather, having your future self pay less in real terms. This isn't permission to rack up bad debt. It's an insight into strategically leveraging fixed-rate liabilities, especially against appreciating assets. This phenomenon is a direct consequence of the time value of money, supercharged by inflation. The second massive transfer happens in the realm of assets. While cash sitting in a savings account is rapidly losing value, certain tangible assets act as powerful inflation hedges. We're talking about real estate, specific commodities, and even businesses with strong pricing power. These aren't just investments in the traditional sense. They are shields that don't just protect your wealth, but actively capture the transferred value from those holding depreciating assets. Consider real estate. As construction costs rise due to inflation, the value of existing structures often increases to match. Your rent-paying tenants are effectively contributing to an asset that's gaining value in real terms, rather than losing it. Similarly, businesses that can easily pass on increased costs to their consumers without losing market share are winners. They maintain their profit margins, while the consumer bears the inflationary burden. This is a classic example of microeconomic pricing power at play. So, what about the people on the other side of this transfer? They are typically those holding significant amounts of cash, relying on fixed incomes that don't adjust for inflation, or holding investments that perform poorly in inflationary periods, like long-term bonds with fixed interest rates. These individuals are unwittingly transferring their purchasing power to those who understand how to navigate the inflationary currents. This isn't about being greedy. It's about understanding the financial system and protecting your future. The key microeconomic insight here is elasticity, not just of demand, but of price adjustment within different sectors. If your income or assets are inelastic to inflation, meaning they don't adjust upwards quickly, you're a net loser. If they are elastic, or even hyperelastic, like certain hard assets, you become a net winner in the wealth transfer game. Another subtle loophole arises in specific niche markets. While overall prices may be rising, certain overlooked segments or undervalued businesses might present unique arbitrage opportunities. These are often smaller, less liquid markets where information asymmetry or behavioral biases create temporary mispricings. Identifying these requires a sharp understanding of local supply and demand dynamics, far removed from broad economic indicators. For example, imagine a local shortage of a specific raw material due to supply chain disruptions, a microeconomic event. If you can secure that material at pre-inflationary prices and sell it into the inflated market, you've just capitalized on a localized wealth transfer. It's about recognizing the short-term disequilibrium caused by broader economic forces. Most people focus on the big picture, missing these granular opportunities right under their noses. The biggest mistake people make is inaction. They see inflation as an unavoidable tax and passively accept its erosion of their wealth. But armed with this microeconomic lens, you can start to see the levers. You can identify where money is being drained and where it's being pooled. It's a strategic game, not a game of chance. So, how do you actively position yourself? First, reevaluate your debt. Are you strategically leveraging fixed-rate loans for appreciating assets? Second, scrutinize your asset allocation. Are you overexposed to cash or low-yielding, inflation-sensitive investments? Third, consider how your income stream is tied to inflation. Can you negotiate for cost of living adjustments or transition into roles or businesses that have strong pricing power? This isn't just theory. These are actionable strategies derived from observing real-world microeconomic behavior under inflationary pressure. The world of finance is constantly shifting, and those who understand the underlying mechanics are the ones who consistently stay ahead. Don't be a casualty of the silent wealth transfer. Now, if you want to dive deeper into specific strategies, asset classes, and detailed frameworks for exploiting these hidden inflationary loopholes, I've put together a comprehensive guide. It breaks down exactly how to identify these opportunities in your specific financial situation and turn the tide of inflation in your favor. This guide provides actionable steps and case studies that go far beyond what we could cover in this video. Click the link in the description to get your free copy and start safeguarding your financial future today.